2024 contribution and income limits are in, so let's go ahead and dive in. The first one I like to start off with is an HSA, the health savings account. And the reason I like to start with that is generally one of the more underutilized type of accounts that we see when working with new clients. A health savings account can be set up if you have a high deductible insurance plan. And the contribution limits for an individual is $4,150. And for families, it's $8,300. Plus, if you're age over 50, you can add an additional $1,000 per year into your HSA as a catch-up. Now, for an HSA, why we see it's underutilized is generally people think that you can contribute and then you pull out money during the year for health expenses, which is totally understandable. Health expenses are quite large nowadays. But we can actually use it as a supplement to a client's retirement plan, and it's a triple tax-free benefit. For example, I put in $1,000 into my HSA. That is a tax-free contribution. And depending on the size of the HSA, I can also invest that HSA, and that will grow tax-free. After age 65, you can take any money out of your HSA penalty-free and tax-free, so long as it's for health expenses. So that is a triple tax-free bucket that we found is very underutilized. The second is the Roth and traditional IRA contribution limits, which was again raised from 2023 to $7,000 per person. Also, again, if you're age over 50, you can do a catch-up contribution of another $1,000, so $8,000 total for the year. As far as the income limits for a Roth IRA, if you are an individual not married and you make less than $146,000 a year, you can contribute directly to a Roth IRA. If you're married and filed jointly and make less than $230,000 as a married couple, then you can also contribute to a Roth IRA directly. If you make over those amounts, there's a certain phase out where you have a reduced amount that you can contribute to your Roth or your traditional. However, there are options as far as having what's called a backdoor Roth IRA, which we'll have another video on shortly as well, if you ever find yourself in that situation. For the 401k contribution limits for 2024, I wanted to save this one for last because there's some potential changes coming up here in the next few years. The first is, for 2024, you can contribute $23,000 into your employer's plan as an employee contribution. Plus, you can do an additional $7,500 if you're over age 50. And that could be in the form of a Roth 401k contribution or a pre-tax or traditional 401k contribution. And that limit does not include any employer profit sharing or matches. That's a much higher level for the year. But I want to save this towards the end because there are some changes regarding those catch-up contributions starting in 2026 based on today's rules. So that ruling from the Secure Act 2.0 that was passed a couple years back was that the catch-up contributions, if you make over $145,000 a year, your catch-up contribution must be in the form of a Roth 401k contribution instead of you choosing that you can do a pre-tax contribution. Originally, it was supposed to be implemented in 2024. However, it was recently delayed to 2026. So be on the lookout if you are utilizing the catch-up contributions, that in the coming years, it may have to be switched to a Roth 401k contribution for that catch-up portion, which may not necessarily be a bad thing, but it might be a surprise for some folks. If you found that information helpful, please go ahead and like, subscribe, and hit that notification button so you don't miss out on anything else. Thank you so much.